I now hand the conference over to Mr. Mohit Jain, Executive Vice Chairman of Indo Industries Limited. Thank you, and over to you, Mr. Jain.
Thank you. Good afternoon and a very warm welcome to all of you to Indo Industries Q4 and FY21 earnings call. I hope you and your family are keeping safe and healthy. I have with me today Mr. K.R. Lalpuria, Executive Director and CEO, Mr. Muralidharan, our CFO, and Strategic Growth Advisors, our Investor Relation Advisors. The world is still battling the COVID-19 pandemic. Most countries are in the middle of the second wave with rising cases each day. However, vaccine rollouts should play a major role in the next round of economic recovery and upheaving business confidence. In these challenging times, I'm happy to share that our team relentlessly worked towards the same focus of serving our esteemed customers, which resulted in highest ever sales volume and revenue in FY21. The end markets have been supported, leading to a record growth in FY21. However, it is important to note that large part of this growth has been on the back of a lot of efforts by the team that have been sown over the past 2 to 3 years in terms of creating new products to gain market share. Our focus on offering an integrated bedding solution with innovation and keeping customer preferences of the future in mind has resonated well with all our buyers. Having entered the largest subsegment of fashion, utility, institutional bedding in 2016, we have continued to make all-round efforts in terms of innovation, service, delivery, and capacity to grow our brand equity in these segments. I'm happy to share that these segments today contribute 15% of our revenue. In 2021, our main market, the United States, showed strength with all-time high retail sales. Adoption of omni-channel distribution, consolidation towards big box retailers, increasing importance of health, hygiene, and wellness products, along with, most importantly, home becoming a center stage, have all contributed to the rising trend. We believe India's edge in the global home textile market has led to India becoming a preferred trade partner as the China Plus One strategy rolls out and plays out. We have continued to focus on growing our branded and domestic businesses. For FY21, branded business stood at 10% of sales, domestic business at 1%, and e-commerce at 4%. We are embarking on increasing the contribution of these value-added segments and have accordingly set our target for FY23. Our domestic business, we are targeting to reach 3% of sales and e-commerce to reach 8% in the next 2 years. Our focus continues to remain on increasing service levels and communication with our buyers to understand their evolving needs and create products of the future to stay ahead of the curve. At Indocount, we've evolved from being capable by leveraging our knowledge capital to being adaptable by defining capabilities with strong foundation to being reliable by building a trusted corporate house. Now, I would like to hand over the call to Mr. Lalpuria to share the business performance. I think KK, you're on mute.
Good afternoon, everybody. I thank Mohit. I'm happy to announce that we have been able to achieve volume guidance of over 75 million meters. FY21 volume stood at 78.17 million meters. For FY22, we expect volumes to be in the range of 85 to 90 million meters. CAPEX. In order to address the growing demand, during the quarter we announced expansion of our bed linen capacity by 20% from the existing capacity of 90 million meters. We scaled up to 108 million meters by debottlenecking and balancing facilities. The brownfield investment for adding commensurate cut and sew facilities and for enhancing the capacity for top of the bed products would entail a capex of rupees 150 crores. We are also modernizing our spinning units with compact modern technology. This would entail a capex of rupees 50 crores. These investments are expected to increase the revenue by rupees 600 crores over the next 2 years post-commissioning. At Indocount, we have delivered growth amidst challenging environments on the back of flexible balance sheet, continuous research and innovation, accelerated presence in health, hygiene and wellness products, consistent focus on value-added segment of fashion, utility and institutional bedding, and also a quick adaptations of market trends. In order to create a strong B2C and B2C foothold, we have established offices and design studios in key cities of the world to understand customer preferences and create products for the future. Accordingly, we have entered various brands through launch of holistic health and hygiene brand, Sleep RX, which is a performance brand, Pure Earth on the sustainability side, a brand well recognized, Boutique Living, mid-market aspirational brand in the domestic market, and this year we had launched Layer, a value-driven mass brand. We are now focusing on creating more visibility through digital marketing channels. We are trying to create a pan-India distribution network through MBOs and LFS formats. In today's world, e-commerce, omni-channel, and B2C has become an important channel of distribution globally. Due to this additional channel of distribution, a wider section of people in Tier 2 and Tier 3 cities have also got an opportunity to buy products both offline and online. As a company, we have taken the right steps towards adapting to the new avenues of sales according to the changing customer ecosystems. Our performance during the period has provided us with renewed confidence in exploiting these new channels of distribution and grow further. We believe there is a huge opportunity for a quality brand and product in the Indian market and are confident of creating a strong brand recognition for our domestic branded business. On the ESG side, Indocount, we will continue to remain ESG-focused organization with well-defined principles, roadmaps, and targets. We are enabling a sustainable approach in all our operations, be it sourcing of raw materials, manufacturing, supply chain, and waste recycling. The company has taken various initiatives across ESG segments as detailed in our investor presentation. Let me now share with you our operational and financial performance. FY21 volumes stood at 78.17 million meters as compared to 61.8 million meters in FY20, a growth of 26%. Q4FY21 sales volume stood at 21.65 million for Q4FY21. Our order book continues to remain healthy. We are optimistic and expect volumes for FY22 to be in the range of 85 to 90 million meters. Total income, rupees 705 crores in Q4 FY21 versus rupees 425 crores in Q4 FY20, a growth of 66% on YOY basis. For Q4, we have not considered RODTEP benefits in revenue as the rates have not been notified by the government so far. Our revenues are rupees 2,557 crores in FY21 versus rupees 2,135 crores in FY20, a growth of 20% YOY. EBITDA, rupees 106 crores in Q4 FY21 versus 35 crores in Q4 FY20, a growth of 200% on a YOY basis. EBITDA margin stood at 15% in Q4 FY21 versus 8.3% in Q4 FY20, an increase of 671 bps on a YOY basis. Our total EBITDA rupees 415 crores in FY21 versus rupees 238 crores for FY20, a growth of 74% on a YOY basis. EBITDA margin stood at 16.2% for the full financial year FY21 versus 11.1% for FY20, an increase of 507 bps on a YOY basis. At rupees 58 crores in Q4 FY21 versus rupees 8 crores in Q4 FY20, a growth of 600% on a YOY basis. The PAT margin stood at 8.2% in Q4 FY21 versus 1.9% for Q4 FY20, an increase of 625 bps on a YOY basis. The total PAT stood at rupees 249 crores in FY21 versus rupees 73 crores for FY20, a growth of 241% on a YOY basis. The PAT margin stood at 9.7% in FY21 versus 3.4% for FY20, an increase of 632 bps on a YOY basis. On the dividend front, the Board of Directors have recommended a final dividend of rupees 1.50 per equity share, subject to approval of the shareholders at the ensuing AGM. Our face value of the share is rupees 2, which please note. Net debt. As on 31st March 2021, total net debt stood at rupees 263 crores, implying a net debt to equity of 0.20x. The working capital days have increased primarily on account of increasing debtors due to extension of delivery schedules on account of logistical challenges faced in end February and March. We expect this to normalize in Q1. For FY21, our ROE is at 19.4%, while our ROCE at 24%. That's all from my side. I now leave the floor open for the questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tarang from Old Bridge Capital. Please go ahead.
Hello, sir. Good afternoon, and congratulations for very strong set of numbers, especially in H2, and having beaten your guidance. Just a couple of questions. One, sir, how the 85 to 90 million square meter guidance that you've given, what is the source of the confidence to achieve this? And the second question is that, if I were to do a like-to-like Q4 versus Q3 revenue, in the sense that if the ROTEP rates which you've eliminated in Q4, but if I were to do a like-to-like, what would have been a like-to-like revenue without ROTEP for Q3? That is the second question. And the third question, about 50 crores for the compact spindling capacity. If you could just explain what are the benefits qualitatively of this, and how will it help you in terms of profitability?
So thank you for your question. First of all, I would answer on the guidance. We have a strong momentum and acceleration on the order book position, and our order book position is quite healthy as of now for the next 2 quarters, and that made us provide you the reason that the guidance is 85 to 90 million meters.
Okay.
We have capacity. We are debottlenecking the capacity as well as we move forward, which will be coming into play by the Q4 FY22. So we will be able to serve the customers very well, and the US market in particular is doing quite well. As you can see, the retail sales are almost growing there by almost 7 to 8%. The vaccination drive is also trying to bring in confidence among the consumers. So we strongly feel that we should be doing good volumes as we have added up some new product categories and some new customers going forward. So that explains about the guidance part. The second is the RODTEP. The rates have not been notified yet by the government, and for that reason we have not accounted that in Q4. If it would have happened that the government would have notified it, then we would have added up another 45 crores to our revenue.
Okay.
So in this year, probably whenever the government decides this rate, as we are mentioning that in our shipping bill, and the government has also mentioned that it will provide us with RODTEP on a continuing basis, we feel that whatever which we will accrue this year will be accounted for, and we will report that whenever it gets notified.
Sure.
So that answers your second question.
Yes.
The third question on the spinning front, as our spinning captive consumption, which we would like to increase with compact spinning and modernized spinning, we would like to see that we make yarn which is usable in our home textile department. So that's the reason we are modernizing the spinning to see that we can provide more quality yarn to our home textile division and gain advantage. As we were selling this yarn earlier, because the old spinning mill was established almost 30 years back, and at that time we did not have our home textile division. So this will bring in a value addition because we will save money on the yarn which we would captively use from our spinning division in the home textile division.
So will this then therefore suffice a good part of your existing capacity also?
Come again?
The fact that you'll be deploying a compact spinning, you'll be making it as a compact spinning mill, will therefore all the yarn that is coming out of there, will that completely flow into the home textile value added segment?
Not completely. Some part of it, because we are modernizing only a part of it.
Okay. Got it. Okay. Thanks. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Praveen Sahai from Edelweiss Financial. Please go ahead.
Yeah. Thank you, sir. Thank you for taking my question first, and many congratulations on a very strong set of numbers and beating the guidance as well. So my question related to the inventory and the debtors number. So that has increased, both the things has increased, and there is a reason for some logistical issue. Can you elaborate more on that? Why the the data number has increased? What the challenges in the logistical front you had faced? And secondly, is that normalized now?
See, what has happened, like due to logistical challenges, the orders were bunched, and they got extended a little bit from end February towards mid of March. And as we provide some terms to the customers, the realization would happen in this year. So this will normalize going forward, which we will report in Q1.
So just more on that, sir. What exactly the logistical issue? It's a lockdown issue of internal lockdown, domestic lockdown, or something else?
No, it is the logistical challenge, right? They're not getting containers, freight, movement of trucks, etc. And the frequency of the ships also got delayed at the end of the year, this year. The Suez Canal issue.
Okay. Yeah, that's a 6 day of a lockdown because of a Suez Canal. Okay.
Yeah.
So that's because of our data numbers has increased, and now you are seeing a normalization in that.
Yeah, this quarter it will normalize.
Okay, and similarly for the inventory as well, because inventory also we had observed that say some 10 days increase. So that is also because of that only.
No, you see the business is growing and we have added revenue this year. So in absolute number, there will be an incremental inventory. Right. Secondly, you see because of so many uncertainties in the market, lockdown, restriction of interstate movement of goods, the freight, the availability of containers, the frequency of the ships arriving from different places. So all these factors considered, what we have done is we have built in a buffer stock in order to serve our customer better for the standardized quality. And that's the reason, since we have adequate capital with the company in order to serve the customer better and to keep the supply chain intact and help us deliver the customer on time. So all these reasons goes beyond in building up the inventory for the standardized product. Because you see, not only in Maharashtra, there are issues in other states where we source material from. So we have to be building, the inventory levels to a reasonable parameter where we can serve our customers much better going forward.
Mm-hmm. Great, sir. Sir, second question is, as you had mentioned about the new product and the new client, can you give any sense on contribution for those new product or new client in last 9 months or a quarter?
See, as we have been saying that we have ventured into the fashion, utility and institutional bedding, and we are able to attract the brands and the retailers to acknowledge our product and buy from us. And we have built in a strong image in the marketplace as well as the backup in India. So we are able to, design some new products and sell in the marketplace. We have also launched a couple of sustainable and performance brands which have found very good acceptance in the health, hygiene and wellness category. So those are the new products like antibacterial, antiviral, as well as some other organic products we have launched to keep up the sustainability flag line, have found good acceptance in the market as people are becoming more and more aware about the climatic change and the sustainability. So those are the new products which we have added. We have also launched layers this year, in which we have addressed the mass merchant requirement in the domestic Indian market. So this is also a good product launch which we have recognized in our product portfolio. Going forward, we see that there is a good movement onto sustainable fibers and various other products in organic and DCI cotton, which we will latch upon to. So product, of course, is like our core competence, being innovation and product development for the company, is providing that competitive edge to promote newer products. As far as new customers are concerned, yes, we always add on new customers and new countries. And as you know, we are exporting to almost 54 countries. So we keep on adding some new customers going forward. And that's why you are seeing the growth.
Great, sir. Thank you for answering my questions. All the best, sir.
Thanks.
Thank you. The next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Yeah, Mr. Lalpuria ji and management team for excellent numbers overall and buoyancy in overall company and home textile market. So a few questions on your capex. Is 200 crores will entirely be spent in 22 itself, or is it in a phased manner? How is the capex schedule?
See, as I mentioned, we will try to spend during this year only because we need capacity, and the modernization of the spinning will help our home textile division. And also we need, once we increase our capacities on the processing side, we need to commensurate it with the cut and sew facilities as well. So it will be our endeavor to invest this 200 crores during this FY22 only.
And is it adding any spinning capacity or it's just modernizing it?
Modernization.
Okay. And what is the spinning capacity right now with you?
We have around 60,000. We'll add up a few thousand more spindles to end up with around 70,000 spindles.
And what is the geographical mix of sales? Like US is how much, Europe is how much, and India is how much?
Currently, we are at 75% to the US and 15% to EC and 10% to UK and other rest of the world countries.
And what is your expectation on RODTP rate since that was a very large number at almost like 7.5% earlier? And you have not provided this number now. So what's the industry body represented into government and any update on same?
See, the RODTP is basically the refund of taxes, levies and duties, which the Pillai committee earlier decided upon the rate by taking into consideration all non-GST refunds. And they had recommended to the ministry that this rate has to be provided to the textile industry so that we don't end up exporting taxes. Our council has represented that the same rate should be carried forward because the taxes have not reduced so far. So we hope that the government will recognize this fact and will provide appropriate rate in the coming year. And we are very hopeful and are pursuing with the ministry to provide similar rates, what they had declared, because the rates haven't gone down. But we will await the government notification for declaring these rates.
And what's the current status? Are your factories operating at full capacity, at reduced capacity due to various lockdown measures of various state government? If you can update on the same.
Yeah, the district collector has recently in Kolhapur issued a guideline where they had asked us to lock down for 8 days only. So we are following those guidelines because we are very much concerned about the safety of all our workers and employees. So we are following these guidelines, but we have duly reported to the stock exchange that there will not be any material concerns on our business. And because we have built our supply chain in such a way that, to absorb such uncertainties going forward, we will be able to serve our customers and maintain similar revenues as what you had seen in the 9 months. As you can recognize the fact that the first quarter was a washout, and in spite of that, we were able to maintain the supply chain and deliver to our customers with a growth of 26%.
Okay, thank you and best of luck.
Thank you.
Thank you. The next question is from the line of Aman Sintalia from AK Securities. Please go ahead.
My question is that, sir, recently the industry has shown a lot of price increase. So whether we got that price increase from our customers or it will be gradually we will receive from the customers.
No, See, we have long-term relationship with the customers, and we have joint business plan wherein they have the retail platform on which we are able to supply the material, and that reaches to the end consumer. So we both are on the same boat. So they do understand whenever there is an adverse situation, they negotiate prices with us, but they do pass on because it's a two-way treaty. Secondly, in the past also we have handled such situations, and we should be able to handle such situation going forward, because we do understand that cotton being a commodity, there will be ups and downs which we need to manage. And with our product portfolio, we have been able to offer the competitive advantage to our customers. So they have agreed to some of our price challenges and have given us the necessary support.
And sir, second question is how much our total requirement of yarn is from our captive, we are producing captively?
See, we are producing almost like 25 to 30% of yarn in-house, and the rest we source outside. India has got a very big capacity of spindlage, and plus cotton is available in abundance. So we feel there is a good supply of cotton yarn in India, and India exports a lot of good quality cotton yarn to many of the European countries and Japanese countries. So the quality is also appropriate. So we feel that there is a good supply system recognized by everybody in the textile trade, that yarn is available in very good quality and very good prices in the Indian market.
So sir, after this expansion and modernization of the spinning mill, the percentage of captive production will be that remains same around 25%?
Yes, to some extent it will go up, of course, by say another 5-7%. But you see, we have flexibility, which is a large tool, because we are using many specialized yarns as well.
Okay, sir. Okay. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Lokesh Manik from Vallum Capital. Please go ahead.
Yes, good afternoon. So my question again is on your guidance. Just for clarification, you did mention before, the increasing yarn prices would be passed on to customers with the volume that we are guiding. Will we be able to, the customer would be receptive for that?
So he is already receptive, and we also need to see that what value addition we provide.
Okay.
Whenever there is a raw material increase, we have to look for avenues how we are able to add value to our product and give the customer in their
Correct.
market an edge to sell. So
Correct.
we have to improve our operating efficiency. We have to see that what product mix we sell. We need to see how we can realize more or add value, or we look for other distribution channels. So these are all the permutations and combination as a company we need to look for, and we have to see that we just cannot go back that the price has gone up and you just provide us, because in their market also they have the similar challenges, but we have to scale up, to the occasion and manage it. We have to hedge our raw material properly and see that how we can, provide long-term relationship to our supply chain.
Right. So apart from yarn prices, they would also be flexible in terms of other variable costs like logistics cost if suddenly it goes up, what we've witnessed in the last year. So they understand that, and
the water finds its own level.
Okay.
In the market, the market forces always, will be volatile. But then, they also know that they have to exist, and we also know we have to exist. So it's a two-way,
So where do you see average margins for the company, given that, it has been quite volatile in the past few years, or since almost 6-7 years? So on an average, where do you see that settling down to?
See, we had given a margin guidance last year, last quarter, last con call of 15 to 17%, and we would like to maintain it.
Okay. And your other businesses in terms of your e-commerce and the new opportunities that you're tracking, which fashion, utility, all these things combined, if I'm not mistaken, would be 30% of the business. Am I correct on that, sir?
So we have said we are 50% of it on the larger base. So if you see, our base has moved up and our percentage has also maintained. So we have grown that business. But you see, we want to tread along very correctly and very surely for all our customers, because you see, it is design oriented, it's a specialized item. We need to build up a proper backup with skill sets, etc. So all this needs to be done, and the business has to be learned. So there is a learning curve, which we have done so far. So I think as the China Plus One strategy moves to India's favor, we should do well in this in the long term, like 3 to 5 years.
Okay.
Fashion bedding and utility bedding.
Right. So any update on the India-EU FTA, which is supposed to be beneficial and can be a growth driver for us for entry into EU?
Yes, of course. Once the EU FTA, comes into play, the whole market will open up. We are at 9.6% tariff against Pakistan and Bangladesh to 0.
Right.
And I would like to also ask Mohit to just provide you some more, basis on the, the growth and the outlook.
Sure. So Mukesh, just quickly, you asked a question. Just want to make sure that you get it correctly.
Right.
Are those 4 categories 30%? The answer is not really. I mean, what we've given is the breakup, how much we've done category-wise, but some of that might be interchangeable.
Okay.
30 will not become 15. But some of it is interchangeable. Let's say there's a branded business which is 10%, and some of that would be in e-com also. So you cannot just do a plain math and just add it to 30, just to clarify that point.
Right. Thanks.
And just to reinstate to what KK said today, that, if you look at the US market, India today, as of end of March, has a 59% market share in bed linen. Which is substantial, right? I mean, for the home textile business, and 43% on the towel side. So there is no reason that we as a country, and then as Indo count and other players, would not benefit, as FTAs from Europe and the UK get into play. But we are not basing any of our businesses for that to happen. As and when that happens, of course, we will be ready for that.
Okay. So any vision for the company in terms of, how do you see your non-bed sheet products or value add like fashion, utility and institutional segments as a percentage of top line, say, going 5 years down the line to what they are today?
Sure. So, for us, we're a very, very focused company on the home side of the business, home textile, and within home textile on the bedding side of the business. That's where all our growth is going to come from. So as we grow our core business, which is predominantly sheet sets, we do see growth, substantial growth coming from fashion bedding, utility bedding, as well as institutional. That's why as we augment our capacity of dyeing and finishing from 90 to 108, we are also augmenting our filled product capacity, which is on the fashion and the utility side. As we speak about our branded business, e-commerce, all of these, last year we've grown in 100% in these businesses. Of course, would it remain 100% for each year to come? The answer is no, but I think we have another, let's say this year our e-com business would also grow by more than 50%.
Okay, but are you targeting any percentage of sales as a top line for the next 5 years from these businesses?
We haven't set forth an exact percentage, but I would say that each one of these would be substantial. Also endeavor is, as we grow our business, to see that a fair chunk of our business goes from a B2B model to a B2C and a D2C model. That is a journey that we have to go through. We have to tread it carefully. But that's the journey that we have entailed for the company, that how do we start selling more under our own brands, whether it's a B2C or direct to consumer.
Right. And overall, we have also given you in our earlier con call that in the next 4-5 years, we would like to double our revenues from here. So that's what the vision is.
Sure. Thank you so much, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ronak Vora from Om Advisors. Please go ahead.
Hello, sir. That's a good set of numbers. How do you see your EBITDA margin stabilizing in the long run?
We have already given a margin guidance for 15 to 17% as of now.
Okay. So is that including duty or excluding the new tariff that would be given by the government?
Excluding.
Okay. Thank you.
Thank you. The next question is from the line of Sajal Gupta from FE Securities. Please go ahead.
Yes, good afternoon, Mr. Lalpuria, and to everyone in the management. Congratulations for a good set of numbers.
Thank you.
My question is, the kind of percentage growth you people are showing right now. When can we see the organization aspiring a turnover of $1 billion revenue? Can this be achieved in next 4-5 years?
आपके मुंह में घी शक्कर.
I would love to have that.
The company as we move forward, see, we are taking right steps in the right direction, and we have been duly recognized by our customers. And what we have recognized the fact earlier, and which we have mentioned also, that we were catering to 4 billion chipsets market earlier. We added up around $10 billion target market when we added up fashion, utility and institutional wearing, in which India was having earlier only 7% market share. China was dominant there. And China is losing ground not only in chipset, but all these categories. So there is a big opportunity out there because there are only few countries like in Asia which are supplying textile to the world. 85% of textile is supplied by these 5 countries. Now, Bangladesh and Vietnam are labor arbitrage. Pakistan, as we know, has got limited cotton and they are into short staple, basically towels and denim. Whereas India has got a versatile supply chain of short staple, medium staple as well as long staple. And India also has an established spinning segment. So I think there is a big opportunity out there and India is well positioned, and well as the companies, our peer group, ourselves, we are all well positioned because we have performed in the last 2-3 decades and have served brands and retailers worldwide. So the recognition, the performance and the opportunity all are there. And that's why, we have mentioned in our investor deck that from capability, we have adapted to the situation where because the pandemic has thrown in some new consumer behavior, which we have adapted as an organization. And now we have proven our reliability that even we can absorb 26% and sweat our capacities. And in spite of all these challenges in the environment, we have delivered to our customers as best we can. We have capital adequacy. We have the desired knowledge and expertise for making textiles. So I think the opportunity exists for Indian companies to accomplish. So I think we can become, and we would become a $1 billion company in the time to come, both organically or inorganically. We are taking the opportunities as it is coming, and as we mentioned, we have entered the next orbit of growth as a company.
Mm-hmm. Okay. So it would be safe to assume that next 5 years we should be reaching this target of 1 billion, if I'm correct.
I cannot quantify. See, I had already given that we will make 2x, and I mentioned that आपके मुंह में घी शक्कर अगर हो जाएगा तो बहुत अच्छी बात है.
Okay. And sir, another question: what is your thought on the dividend payout policy? As right now, you have given us some around approximately 10% dividend payout. Is there?
I think it is 12%.
12%. Okay. No. But as a company, do you have any dividend payout policy which you have in mind?
See, so far the board, decides on recommending the dividend payout and the dividend percentage, looking at the situation. What as a company we have done is we are building buffer of resources so that we can do growth, we can serve the customers better, we can absorb technology, we can invest into digitalization, we can invest into supply chain, we can invest into brands and licenses, and we can invest into talent and other things. So all these areas we need to take care and move ahead. We are a global company and we are having global impact. So we need to watch that very carefully as an organization and sustain all of this. So that's the reason the board takes into consideration all these factors into deciding the dividend. But as a company, we have always been a dividend paying company, and we believe that we should give back to our shareholders all the time, which we will do in the future as well.
So why I'm asking you this question, because most of the companies today have a dividend payout policy of 20% of the profits or 25% of the policies, all the good companies. And with our company right now, it's somewhere around 12%. So do we see this percentage going up in coming years?
Of course. We, as I say, the intention is there. And we have very positive attitude towards this, that we should reward all our shareholders from time to time. But we are building a company. As you said, in order to build a $1 billion company, we need resources. So we need to look at each of these factors to see that how we grow.
Okay, fine. Thank you, sir, and all the good luck to everyone.
Thank you.
Thank you.
Thank you. The next question is from the line of Prerna Jhunjhunwala from B&K Securities. Please go ahead.
Thank you. Congratulations, sir, on strong set of numbers.
Thank you.
So I wanted to understand the opportunity when Europe is reviewing with GSP plus status to Pakistan. What is the kind of opportunity that we are looking at, and how do we stand in terms of competitive advantage when that happens?
Yeah, we all know that the European Parliament has mentioned about issues in Pakistan over human rights. And so they have recommended that why we should provide GSP plus preference to Pakistan, where they enjoy lower duties. This we are pursuing strongly with our government to see when they sign up our FTA with them, at least we will come to a level playing field. Now, EU, as we all know, is a very big consumer of home textiles, equally to the US market. We have not been able to capture that market because of this duty difference between us and the other textile producing countries like Bangladesh and Pakistan. Also, we are facing one more issue on the rationalization of duty on the MMS side. We are expensive as a country by almost 30% in MMS. If the government rationalizes and reduces duties in this towards this supply, we will become competitive in polyester as well as polyester blended fiber, polyester blended cotton products in this marketplace. So I think once we sign FTA, there will be a huge market open up for our products, and we will be able to grow our market base out there. Also, it will neutralize our entire focus on the US market. And this will give an opportunity to many Indian companies as well as us, an opportunity to grow business in many product categories over there. So I think this will be a big opening of opportunity for companies like us and all the home textile supplying companies.
Okay. Even if FTA is not signed and only GSP is removed, then also do we come at level playing field?
Yes, of course, because once the duty is removed, but this is only with Pakistan. The difference is not with Bangladesh.
Mm-hmm.
So Bangladesh will still enjoy. So that's why I'm saying if FTA is signed, then we'll be at level playing field.
Okay. But Bangladesh doesn't have huge home textiles exposure. I'm just trying to understand from your company's perspective.
So it is at the lower end at opening price point, and it has got processing capacities where it prints very well, and it supplies to the UK market in a big way as well as some European countries. So they are recognized, as a supplier to home textile also, some of the products.
Okay. Okay. And sir, in this COVID times, the last 1 year that we have gained huge market share in the US market, can we bifurcate how the demand has been in the low price segment, mid price segment, and high end products? Whether it has been driven by some particular segments and other segments can catch up, which can drive the demand further with reopening or gaining jobs, etc. So some color on the US market from that perspective would also help.
As we have mentioned, the health, hygiene and wellness sector has grown during the pandemic over there. And there's a lot of awareness about what product to use and utilize. So the consumer behavior has stepped up their value addition on products which are intimate to their skin. And bed linen, is used on beds where person sleeps for 8 hours and he uses them every day. So the consumption of bed sheets and the awareness of using much more hygienic bed sheet has gone up. So we feel that going forward, there will be value addition segment which will increase in time to come as people are also focusing on the sustainability drive. They are recognizing more sustainable products to absorb and use. So we feel that the segment in which we are, there will be definitely value addition. As far as the lower segment also has moved up because of the affordability, because many of the people had lost jobs. So the affordability also, has been a prime reason for moving the lower segment as well. Because whenever a category moves up in consumption, they are all three segments, whether it is lower or mid or high. But what we have also seen that the e-commerce has given the brands and the licenses also a recognition. So that segment is also moving up, which will give us a competitive edge to supply as well as to sustain and grow our business to the value-added products.
Okay. And so, how much was the export incentive booked in FY21? In FY20, it was around 168 crores.
I'll tell you the figure offline, Prerna.
Okay, no problem. And sir, our employee cost on a Q-on-Q basis has seen a substantial increase. Why would that happen?
Murliji, can you take this question, please?
Yeah. Hello.
You are
Hello.
on mute.
Hello.
No, we can hear you.
Yes, sir, we can hear you.
Yeah. So basically, one is that in the last quarter we had our annual review, so we had increments for the staff and workers basically. So a partial increase is coming due to the normal reviews. Based on the performance, we normally check the performance, review the performance from January to December. So this quarter we have given the performance benefits. The second is also the management's this one, some commission payments to the executive directors based on the performance. This is recommended by the board that the performance have been good, so they should be rewarded. So in this quarter there is a provision for that.
Okay. So which means at current capacity, around 50 crores of employee cost is sustainable?
So I think, maybe around this year. Correct.
It will be around.
You're right. Your assumption is right. Yeah. Yes.
Okay.
Your assumption is right. Yeah.
Okay. And sir, my next question is also on the job work expenses. We've heard that job work expenses have increased in the industry due to the increasing yarn prices and difficulty in operations due to COVID times. How is the possibility of the same with the customers? How acceptive they are on job work charges, or it has to be managed by us only?
No, the job work charges, you see, they vary as per the product mix, Prerna. So they have to be seen collectively for the full year. And if you look at our gross margin, you will see that we have been able to maintain and in fact better it. So collectively, you should see the overall raw material cost in totality.
Thank you. May I request Ms. Jhanjhanwala to please rejoin the queue? We have participants waiting for their turn.
Sure, no problem.
Thank you. Participants, we would request to please limit your question to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Kapil Jagasia from Edelweiss. Please go ahead.
Hello, sir. Thank you for taking my question. I have 2 set of questions. Firstly, if we see the overall revenue growth, that is around 66%, whereas the volume growth is around 68%. So, would there be a realization decline of 2% or so? Is my understanding correct?
No, if you compare our standalone numbers, which is our core business, to the volume increase, they are equivalent, like 26% to 26%.
Okay, so this would
only
be more of
to some extent, like we have one of the subsidiary, Pranav Aditya, with discontinued operation. So that revenue of around 60 crores we missed out. And there was higher captive consumption of yarn. So we lost revenue there too. That all added up to, on the consolidated basis. Whereas on the standalone basis, you will see that our revenue as well as the volume, they match up to about 26%.
Okay. Thank you for that. My next question is, your e-commerce contribution has increased quite a lot. Now it is around 4% of sales, and you're targeting around 8% of sales. So the margin growth or the margin addition from this segment would be how much higher to the overall as compared to the other segments?
See, we have laid down the back end and we are just growing up on a smaller number. So we'll be able to provide you much better guidance on our next con call as we grow in this business. Because what has happened is the pandemic has provided us this opportunity wherein, we have grown this number substantially, like say by 100%, but that is on a smaller base. But we expect this business to grow in the future and we will provide you margin guidance on the same as well going forward.
Okay, sure. And then prices, like when do you see, the cotton prices being, on a downward trend? Like right now it is on the upper trend only.
See, the cotton crop has been good in India. We are waiting now for the monsoons to pan out. And the sowing is happening as we speak. Will get started. So depending upon the sowing and the monsoons, we'll get to know how the crop is in India. And we'll be able to give you a much better insight on our next con call. Having said that, the cotton prices has remained below 45,000 a candy. And whatever surplus cotton was there, the Cotton Corporation of India has brought in order to maintain the supply chain in India. India has also exported to some of the countries cotton. So India is still a surplus country with cotton. And I think coming year as well, the prices should remain in the same range.
Okay. Thank you for all the questions, sir. All the best.
Thank you.
Thank you. The next question is from the line of Sunil Agrawal from Caring Capital. Please go ahead.
Hello. Can you hear me?
Yes. Good.
Yeah, hi. Congratulations, sir, on your good set of numbers. I have some very specific questions on your trade debtors. Basically, you've given a reason that the trade debtors has mainly increased due to your logistics issues and all that, right? So, what is the exact number? If the logistics issues were not there, what was the exact number that the trade debtors has increased by for this logistics issue?
Yeah,
around 150 crores.
Yeah.
Okay. So even if we take out this 150 crores, your trade debtors
250.
Oh, 250, not 150.
Yeah. No.
Okay. And this everything will be realized in the next quarter, right? The coming.
As we speak, it's already being done.
And there are no claims from the customer or anything
Nothing,
on
zero.
or any dispute?
No, it's nothing. And all our shipments are insured by ECGC, so there's no concern at all. And this is a regular course of business. It just happened to be so on a particular date.
Understood. I'm from the same apparel business, so I'm aware of these things. Second question is regarding
very careful with when we do business, because otherwise we lose our capital.
Absolutely. So another question is on the FTA side. You mentioned that you have competition maybe a little bit from Bangladesh and Pakistan, right? So you have never thought of shifting any, not shifting maybe when you're expanding to put any manufacturing base in Bangladesh, because there are a lot of advantages as far as our garment sectors and textile sector goes, like labor. There is no GSP to Europe, so you have never put it on the board that you want to go outside India and do some manufacturing. Maybe your marketing, everything remains in India because you're already you have already a large base and everything. Just the manufacturing to go out to take that advantage of GSP.
Sure.
Which will add on to your margins and everything.
Good question, Sunil. Mohit here. So, in our business, in the United States, which is our main market, the import tariff is 6.7% on the finished goods, so which is a pretty low import tariff compared to apparel. As well as when you import bed linen into the US, it needs to be fabric forward. So you cannot put up a cut and sew facility in a country and then import it into the United States. So the country of origin goes with where the fabric is produced. So those require very large investments. Now, if you're going to make those very large investments for labor arbitrage as well as saving 6.7% when India is actually growing the raw material, we've looked at it, but it doesn't make logical sense.
No, my question is mainly if you are exporting into EU countries. So you have a big advantage, GSP advantage. You don't have to pay any duties at all if you are exporting it to Europe. So my question to you is basically for EU countries. Because there is big advantage. Just shifting the manufacturing base. Okay, everything, fabric, everything, and you get a lot of advantage. Otherwise, also you can import fabric from China. There are new duties into Bangladesh if you're re-exporting it, and because China is definitely as far as fabrics and other accessories and all these things go, they are much cheaper than India because we source out of India and China as well. So my question is specifically to EU countries, not to US.
You see,
have you never explored this opportunity of an idea to do that, or you want to do that or not? You don't want to shift your base from India. That's my problem.
See, from time to time we do study all these countries. Even Ethiopia we considered, or Bahrain we considered, where there are duty advantages. But that's not the only advantage which we should look into. As what Mohit said, see, we in India are there for almost now 30 years as an industry. And we have established very strong roots in India where we know the systems, the processes, and the movement of the goods, the logistic part, and the people, etc. So it's easier, that you cannot compare all these advantages just to a commercial advantage at one time. It may happen otherwise in the future that they may be imposed some duty after 2 years, just like how it is happening to Pakistan. So just for a duty sake, you do not shift industries out of India to any other country, just like how nobody in apparel also shifted to Vietnam. So we do study all the time these different advantages of different countries who are supplying. But I think India, with the kind of raw material, as I mentioned, has a definite advantage, producing textile. And in time to come, you will see that the brands and retailers will be very much comfortable in sourcing, whether it is textiles or apparel or any other technical textile, to source out of India. Because India, when it grows into a 5 trillion economy with kind of digitalization, with the kind of labor force it has, I think so the textile will mature into a very big industry in time to come out of India, and India will become a big sourcing partner to the developed economies of the world. So, but having said that, we are not closed. We haven't closed our mind in order to study this. We keep an eye on it, and over and above this, if you look at our positioning, our company's positioning and India's positioning as well, we are into the mid to high segment, where Bangladesh and Pakistan are in the lower segment. If you look at our market share also, we have been able to gather almost like 58% in the US for bed sheets and more than 40% in towels in these 2 decades. So I think as a country, we have a competitive advantage. We are recognized by the buyers and the retailers that we have a good supply chain and a good logistic, as well as a good raw material support, and plus the policies also, the regulatory policies in our country, just like the Make in India or the Atmanirbhar Bharat or the refund on duties, taxes, are all inclined to provide the necessary support to textiles. So I think with such a competitive advantage, we will be able to grow our business out of our country very much in the not only in the near future but also long term.
Okay, sir. Thank you so much. I got your point. Thanks a lot. All the best for the future.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
With the recent announcement on capacity expansion, we remain confident to cater to the growing demand for our products and consequently increase our market share. We would also continue to focus on increasing our penetration through B2C and B2C foray. With this, I would like to thank everyone for joining on the call. I hope we have been able to address all your queries. For any further information, kindly get in touch with me or Strategic Growth Advisor, our Investor Relations Advisor. Thank you.
Thank you. On behalf of Indo Industries, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.